Now for a check on the media sector's performance on the share market this week. We're joined by Chris Weston from IG Markets in Melbourne. Chris, just firstly wanted to ask you about Ten then and how it's been trading after that capital raising and what the brokers are saying about it.
Well, I mean, it's not gone away particularly well in my mind. I mean, clearly, when you bring out 38% more shares on issue, you are going to see a sizable dilution to the share price and to the amount of shares on issue. I mean, it's traded down to 50 cents. It seems to be finding some support at 50 cents. It's considering the raising was done at 51 cents, considering the theoretical ex-right price is 60 cents, and that's the price you want to see it gravitate to. You'd say you'd be a bit disappointed, but I still can't see an investment case in Ten until you get down to the sort of 40 cents at the moment. You know, CBA have cut their 12-month price to about 43 cents, Deutsche to 49. You've got RBS and Goldman Sachs 45 cents. UBS have put a sell recommendation on it, not just because of the dilution effect, but because the higher costs, the lower TV revenues you're going to be seeing, the higher net debt that they've come out with, and obviously the worst gearing on the back of that. So it's certainly a big struggle to see how the stock's going to see a lot of upside in the short term. Okay, they've removed some of the balance sheet risk that we've seen, but at the moment, you'd be waiting for some sort of pullback, and it's a long side of things before we see the turnaround there.
And I guess apart from that, I mean, it's been a tough week on the markets overall, given all the event risk around. How has that been affecting all the other media stocks?
Well, I think first of all, I mean, the stock that's really in vogue at the moment is Fairfax. I mean, we've been talking about the special line that's gone through 1.8% of the company, and the stock had about a 3% jump up on the back of that. I really like Fairfax, actually, to be honest. I know a lot of people are saying it's got big cyclical headwinds at the moment, and rightly so. And that's one thing you've got to look at. You've got to look at the downgrade. Okay, fine, that the revenue numbers for the second half down 8%, a little bit disappointing, but it's still very, very cheap. 3.7 times if you strip out Trade Me. They could be looking to sell that off and looking to buy back their shares longer term. Something very interesting. It's trading on 3.7 times on that multiple. Very cheap with the brands they've got as well. Something to look for if you've got a long-term horizon anyway. Seven West Media is another stock that's been upgraded a couple of times this week. Citigroup coming out today and putting a buy on it, saying a capital raising and consensus downgrades priced in at the moment. You know, Fairfax best stock of the week up 2.5%. Otherwise, you see News Corp up 1%. You're seeing APN down about 3%, as is Seek at the moment. But Fairfax is the one everyone's talking about in terms of that space, and that seems to be having a decent run at the moment.
Great to talk as always. Thanks for that, Chris. Coming up on Media Week, we'll be joined by the editor of techguide.com.au, Stephen Fennick, to find out what Apple unveiled at its conference this week and what that means for publishers.